Welcome to the Times of Industry show. I'm very glad that you've chosen to be with us again. And today, another gold, silver focused show with returning guest Bill Murphy, co-founder of GATA.org. If you don't know what GATA.org is, I highly suggest that you go to the website, you check out Bill Murphy's name. He's been involved in many high-profile cases, especially at the turn of the previous decade, 2011, when all of this gold manipulation and silver manipulation just blew up on the banking center. And Bill, thanks for clearing time here and being with us again.
Thank you, Lear. Great to talk to you again.
Sir, I want to start with Basel III. Can you explain the significance of it?
You know, you can speak to a lot of other people that are better informed than I am in Basel III, because my relationship or understanding of what the BIS does and all this gold regulation is one big horseplay after another. And all I know is whatever the establishment puts out, the Bank for International Settlements and the bullion banks, about the gold price is usually a bunch of hooey to hide something. And I've been dealing with this since Chris Powell and I formed GATA in 1999, and I don't even pay attention to it because, again, most of it is hogwash, and it doesn't mean a thing. They say one thing, they do another. The same with the Bank of England and what goes on there. And that's my take anyway.
You know, one thing about the Basel III is that it changed the risk profile of gold as being marked at 100% of its price instead of 50% of its price. It went from being a tier 3 asset to a tier 1 asset. And the day they announced it was April 1st, 2019. And that's the actual day that gold had its last bottom at 1291. It's just gone straight up after they announced that it's becoming a tier 1 asset. And we've seen incredible purchases by the central banks since then. I want to ask you.
Go ahead. Sorry.
No, please. If you have anything.
No, I mean that's a very good point, right on the money. Because as I've been following my people, the Metropole Cafe, or telling my people, explaining, because watched it very closely. For me, the gold price really started to move, and it changed totally different the way it's traded in the end of May of last year. And you're right, it's changed so differently ever since then. What the real reason is up for conjecture, and you bring up a very good point. From my standpoint, and surely part of it's because of all the central bank buying, the gold cartel, as I call them, the Fed, Treasury, the bullion banks, the BIS, and so on, they're running out of enough physical gold to do what they've been getting away with all these many years. And that's why gold continues to act so well. All dips are bought. We can get into this. The whole open interest structure has changed. Gold's in the process of a major change. And it's happening now, and that's why we're at 1575 gold and after breaking out at 1360 instead of being in the tank like we were for so many years.
So let's talk about China's gold reserves. It's been estimated that they cover about 1% of their currency supply, whilst in the West it's more like 8 to 10%. Is China going to be a huge buyer of gold going forward? It's already the biggest producer, but would you think that they're either preparing for a gold-backed currency at some point or just accumulating significant amounts because they need to at least match what's going on in the West?
Great point. I'd like to mention two things. One, nobody really knows what China has, nor the U.S. I believe, my opinion is that they've accumulated much more than they're telling anybody. One day that will be revealed. Ironically enough, from the GATA standpoint, we believe a lot of the 8,135 tons of U.S. gold is either encumbered or gone. Nobody knows really what the U.S. has either. No different than China, because we haven't had an outside audit of the Fed, Treasury, and the gold that they have there in the United States since 1955. It's ridiculous. Nobody knows. We don't believe, and it's just an opinion, that the gold in the United States is all there, that it's been swapped with different countries and sold. And it's a very mysterious issue. I love what my colleague Chris Powell says, that the United States would rather reveal our nuclear secrets than our gold secrets.
That's a good comment. You know what? I want to ask you, what have you heard about the term peak production? We've been hearing about it for a couple of years now, from CEOs, from Barrick to Goldcorp, big CEOs talking about this, the time it takes to bring properties into production, the difficulty to discover new deposits, etc. Could you talk a little bit about your research into this?
Well, I really don't, Leo, don't do a whole lot of research in it, but I can make the point that how many major discoveries in the last 10, 15 years have we seen in the gold? they don't happen. It's incredible. You don't find all of a sudden all this gold has been found. Meanwhile, the major producers and other producers continue to go through their gold supply. And it's part of the bigger issue of waning physical supply of gold, although it actually as a total in the last number of years it's gone up, but it's gone up very gradually. And there's no major new supply, as far as I know, in terms of finds coming onto the market. So at some point, all of a sudden, it's not there to meet demand, which continues to grow.
One thing I wanted to mention to you, Bill, is that pig production hit the first time in 1970. You remember what happened in the decade to follow? Peak
Yes.
production hit again in 2000. So the last two times we saw peak production, we had some incredible moves. Now, peak production hit again in 2018. So if this is any historical precedence here, we're looking at a very big move. In 1970s, we all know it was 2,400. In the 2000s, it was about an 800% move higher. We shall see what's happening. But if you look at the bottom of 2018, we still have a lot to go if this is a cycle of peak production, if history sort of rhymes with what's happened in the last 2 decades that this has happened. One of the things that I love about your work is that you openly talk about manipulation of the price of the COMEX and what's going on with the bullion banks, etc. Could you talk a little bit about the latest cases that have been made public, the latest situations that people should know that this is still going on?
Well, one thing to me, one of the most interesting things to me, and again, I call it about the gold cartel manipulation. Again, it's the Fed, the Treasury, the bullion banks, the Bank for International Settlements, and so on, that have conspired, and I use that word on purpose to rig the gold and silver prices. Is that just a while back, and another report had just come out recently, that the Justice Department has called what JPMorgan has done in certain of their trader operations, quote, a criminal enterprise. I don't think I've ever heard that, one government agency calling another one like that I can remember. And basically, they've caught some of these traders what they call spoofing, where they put up a bunch of trades in the futures market to scare people to go in a different direction, which is really Mickey Mouse compared to the real issue. The real issue, these people have been rigging the gold price and silver prices forever. After all, the gold price was 6 for many years, and then you had the London Gold Pool, and then they created the COMEX to help rig the market and the futures market. The good news is they're running out of, again, a physical supply to do what they've been doing. Recently, I followed on the COMEX, you mentioned the open interest, which is the number of longs and shorts in the market, traded in this commodity market in the United States. The old all-time high, when I first started, it was 220,000 back 20 years ago. The old all-time high was 665,000. And not too long ago, it went all the way up to 800,000 contracts, which represented the bad guys, as I call it, selling in the paper market to cap the price. Recently, it just came down, back down to the old-time highs, which was kind of drop. And in that drop, for the first time in history, as far as I can recall, the gold open interest went down on this point. Part of it was on days, 4 out of the 5 days, the price went up. That's never happened before in history, and is an example of the bad guys, as I call them, the gold cartel, the commercials, are in big trouble in the gold market. And I think we're getting closer and closer to the time when it explodes. And I don't think it's too far off now. This has been building for many, many years. And the difference between now and back in 70 to 80 in terms of the time frame is that a lot of the physical gold that they've had to rig the market is now gone. It's what you see as a mirage in a way, what they have, and they're in deep trouble. That's why all the gold dips continue to be bought, in my opinion.
So one thing I think is very unique. Ken Griffin, he's a billionaire worth about $15 billion out of Illinois. The hedge fund is Citadel.
I've heard of it.
CI,
Yep.
very smart guy. One of
Yep.
the smartest people that I've ever listened to in terms of finance, economics, etc. I thought it was interesting that he said that the only thing that America isn't prepared for is inflation. Just talked about the fact that from 1980, basically, we've seen just lower and lower rates, and that the entire economy is just accustomed to lower and lower bond yields and lower inflation. And he said, if this thing changes, this paradigm suddenly changes, then nobody's prepared for it. How much would it take, or what would it take for silver to make a sort of move that is akin to what it did in between 2009 and 2011? What we saw then was around the world, the thesis was that this is a reflation period, and silver went from about $9 an ounce to $49 an ounce. I told you off the air that to me, at least personally, I buy gold as a long-term savings vehicle, and I buy silver as a trading vehicle. When I think silver is about to explode, I go out through various silver miners or options, other vehicles. I don't hold silver as much as I own gold as a hedge, because why own both? Both serve the same purpose as a long-term hedge against fiat currencies, etc. But silver, being much more volatile, if it explodes higher, it tends to have some big moves. So I just want to ask you, what do you think, in your opinion, personally, would it take for silver, for the public to get excited about silver? Because it's not governments and central banks that buy silver; it's the public.
Well, I've been a silver bull for years, and I've been wrong in the sense of the price doing what it has. I'll never forget it going from, as you say, 9 to 10 to 49, and it's collapsed ever since. It's soon going to be 9 years. It's been a horror show for people that believe that the price is going back. It went again to 49.50, what it did in 1980. Silver is the most undervalued asset in the world, and there's only one reason it's down here: JPMorgan. They've been rigging the silver price all this time, and I don't need to get into all the details. And it's the worst acting market I've ever seen. And I think it's the worst acting market in history because of the rigging by JPMorgan and their allies. The gold-silver ratio, 89, 90, 88 to 1. It should be something like 30 to 40. Again, the most undervalued asset in the world. And there's no sign of any change as there has been in gold. The gold action is terrific. Silver gets worse and worse. It's stuck at 1750, 1760. In my opinion, you're going to see that it's not too far away. The gold price is going to explode when it takes out 1600 again and head toward 1800 right away. And at some point here, the JPMorgan crowd is going to have to give up on what they're doing with silver because it's ridiculous. And the reason for that is that as the gold price explodes, silver is so cheap, as you were talking about at certain times, that these traders, investors like yourself will say, hey, silver is ridiculously cheap. Gold's taken off. Silver's done nothing all these years. The investors will jump in, and buyers who've been so complacent because there's no reason to be, any urgency to buy silver for, for their needs, consumer needs and so on, all of a sudden will jump in to buy all the silver they can to make sure they can get it at a reasonable price. And when that happens, the silver price begins to move up dramatically. In my opinion, the key is when it takes out 21, it makes another run to 50 faster than you can imagine.
Well, one thing that's for sure, if you own both gold and silver, and you're looking at this ratio right now, you're saying to yourself, I can sell my gold at a profit and basically have a zero cost basis of zero, or a cost basis of zero, I should say, for my silver because I'm using the profits that I made with gold in order to buy my silver, and then I can flip it and do the other way once silver goes higher. I did want to also comment about something you said, and I think it's important. Could you talk a little bit about what JP Morgan's role is in the world of silver in the bigger context?
Yeah, it's a weird thing because the silver open interest, when last time the price went from, as you were talking, 9 and 10 to 49, the open interest all the way up to the very end was 135,000 contracts on the COMEX. And in my opinion, here's what happened, and I could be dead wrong, that going all the way up, JP Morgan was buying silver physical. Price got up to 49. All of a sudden, the open interest did go up, although it didn't go up dramatically like it has in recent years. And JP Morgan has used this physical silver to bomb the price for 9 years, trading in the paper market on the COMEX. So they've had full control because they had all this physical supply, could hit the market whenever they wanted. So they took the price all the way back down to 1350, 1360 or so. It's made a whopping $4 move since then as gold has made its move, and they're still in complete control.
Where in their financials, where in their public filings will we see the position that they have in physical silver or otherwise?
Good point. I don't know if it's all theirs or they've gone through a lot of it. Ted Butler actually gets into this quite a bit, who's done some really terrific work on silver. He shows in their holdings that JP Morgan has, a great amount of silver. I don't remember the exact amount, 700 million ounces or whatever it is. I don't know whether that represents their physical silver at the moment or the Chinese silver or something like that. Nobody really knows. It's very opaque, very vague. But that's my opinion. One and the reason that they've been able to have such control over silver all these years. And he's been talking about JP Morgan rigging the silver market for a decade or so. And we differ from Ted a little bit because we believe that JP Morgan's involved with the US government, the Fed and the Treasury. JP Morgan's the Fed's bank, and it's much bigger than that. And that's the reason the Commodity Futures Trading Commission looks into rigging and never finds anything, even though the Justice Department calls what JP Morgan has been doing a criminal operation. It is mind-boggling. I think it will be one of the biggest scandals ever when the gold and silver prices blow up, just like Bernie Madoff, just like an Enron when they blew up.
Bill, I assume you're more bullish on silver than gold than right now.
Yeah, because of the ratio, what's happened, and still gold's been on the move, and silver it's done nothing. It's the worst acting market I've ever seen, and every day you start, well, maybe it will change. Nope, never changes. It will change out of nowhere, Leo, in my opinion. Just after gold, or when gold is taking off and really taking off, all of a sudden the silver price action will change dramatically.
So that's just about my opinion, that when gold breaks its old US dollar denominated all-time high, that's when we'll see silver doing many things and the miners doing many things, but not before then. I know it's up.
If I may, I disagree with that. I think it'll start getting on the move, and you could be dead right after gold starts to take out 1,600.
Well, that's beautiful because that's much closer than my prediction. I want to ask you, will we see zero rates in America, in your opinion?
Well, there are a lot of people in our camp and the internet world are looking. Ivan von Greyer's looking for a crash in markets, and other people looking for the markets to go way down, the stock market, the indexes. At the moment, they're on a parabolic rise. If you look at these charts, it's unbelievable. They just go up and up and up. And I know that Treasury Secretary Mnuchin said a year ago, December at Christmas, we're bringing in the plunge protection team to goose the stock market. That's back when it was in real trouble last Christmas a year ago. And boy, has that happened. So I think that, anything could happen in terms of interest rates. They've already come way down. The Fed has said that it will do what is ever necessary. Just yesterday, Chairman Powell, if we have a recession, we've had 0 to negative interest rates around the world. Very few people thought we'd get this interest rates back down again to these levels. Yes, it could. If the markets crashed, it could happen. Absolutely.
Bill, where can people check out your write-ups and just catch up with you.
Well, I've been doing this for 20 years. I write a daily commentary, lemetropolecafe.com. People can sign up for a 2-week free trial. And, people can check out what my colleague does, Chris Pella, great job at www.gata.org. And they can get on his free list after signing up. And we've been fighting the good fight against these bad guys now for over 20 years, and we're not going to quit till we win.
Amen. Bill, thank you very much for taking the time today, and we'll definitely circle back in the immediate future.
I hope so, and I hope it's when we're at big smiles and what we're talking about has occurred.
That's exactly when I plan to call you.
Good. Thank you very much.